This part, we're talking about the final phase of the audit process, which is the wrap-up. So can you give me like a high-level overview about what happens in a wrap-up, and then we'll kind of get into some of the details of that?
Yeah, so during wrap-up, we will start the process after we're there for field work, perform all of our audit procedures. We'll do kind of a basic overview of an overall look of the financials and the numbers, make sure that they make sense based on what we tested, and then prepare the financial statements and do our closing documentation.
So when it comes to completing the final overall analytical review procedures, which is part of our processes and the proposals that we submit, what does that look like? What are you looking for when you're doing that?
So we will look at a comparison generally of the current year numbers to prior year numbers. We'll analyze different changes. We'll look at changes from year over year to evaluate on if we think that those changes make sense based on what we tested. So if we know that there's going to be a big swing in cash, for example, because they made a big purchase, we would expect to see a large decrease in their cash.
So you're looking for outlier, something that is unexpected or shouldn't have happened, basically something super weird, kind of like.
Yeah, based on what we tested during field work, that'll give us an idea on if maybe we missed something or if there's something else we maybe need to look at a little bit more.
Kind of going through, double checking your work, making sure it all is lining up with what you expected.
Yep.
There's also a part where we say conduct closing meetings. Are we meeting with like staff members, leadership, the board, kind of all of the above when that happens?
Generally, it'll be meeting with management and or accounting staff. It's what we call the exit conference. And so after field work, we'll meet with management, accounting staff. That's where we'll discuss if they had any findings during the audit, any comments that we have for things that we saw. We'll discuss any journal entries that we made, and we'll go over if they've had anything significant happen since year end that we might need to disclose in the audit.
When you're preparing the financial statements, you are preparing that information from the previous year's journal entries and that sort of stuff? Is that what preparing the financial statements looks like?
So preparing the financial statements would be taking the numbers that we audited and putting them into the actual statements with the balance sheet, the income statement, statement of cash flows if necessary, anything required based on their reporting requirements. Okay, so governments might have a little bit more because a lot of times we're required to do like budgetary schedules too, where we evaluate their budgeted numbers to what actually got spent, things like that.
So making sure if they have a government requirement that they stayed within their budget, basically.
Yep. And that's also where we'll have like our note disclosures, any supplementary information, anything like that will also be part of the financial statement package.
So after we do everything that's involved with the financial statement package, we issue an audit opinion. So what exactly is an audit opinion?
There's 4 types of audit opinions. There's what's called an unmodified opinion, which is the clean opinion. That is going to say that the financial statements are fairly presented and they're under the applicable framework, nothing significantly wrong with them.
Okay.
And then a qualified opinion would be that the financial statements are clean and appropriately presented with the exception of one specific thing.
Okay.
So, for example, maybe instead of reporting their property and equipment on a GAAP basis, they're presented on the income tax basis because they have some accelerated depreciation taken or something along those lines.
Okay, so qualified being one piece of this is a little bit off. It's not necessarily affecting the entire scope of everything.
Yep. Then you have an adverse opinion, which would be there are significant pervasive issues in the financials that have not been fixed, and really we can't give a good opinion on the financials because things are significantly wrong.
So those are the instances where we can issue an opinion, and there's one more where we kind of can't.
Yep, so then there's a disclaimer of opinion, which is basically saying that we can't express an opinion on the financials at all because maybe we didn't receive information to do the testing.
So then after the audit opinion, there is a management letter. What goes into a management letter?
So the management representation letter is going to be a list of representations that management is attesting to, saying like, yes, we did this in accordance with what we needed to do for the audit. So we're attesting that we believe everything we told you is correct. And we believe that we did this as we needed to do as part of the audit.
So it's almost like we're signing our name to, we did this correctly, we did this to the best of our ability,
Yes.
and that sort of stuff. How about the presentation of audit reports to management and others charged with governance? What is that like?
So this would be something that doesn't necessarily happen as part of every audit. Sometimes we will just give them their audit report, management will present it to the board. Other times we will actually go to a board meeting and present the audit report to those charged with governance.
Okay. Is it just different kinds of organizations, like a nonprofit versus a governmental entity or whatever? They just have different requirements about the reporting? Or is it just that sometimes the board has more questions than management can answer?
The entity determines if they want us to come present to the board or not. Some clients are totally fine with presenting it to the board themselves, and sometimes the board is the one that likes us to come and present. Kind of depends on the entity, not necessarily a requirement of any type.
And then do we submit the audit to federal clearinghouses? That doesn't happen for every audit, or does that happen?
No,
for every audit?
that'll be only if they have a single audit, which is an audit of the federal awards. And that would be something that will assist with getting it put together, and we'll do our certifications related to that submission, but the client actually is the one who has to do the submission.
So we can't submit it on their behalf. We provide the information, but they actually have to be the ones that submit it.
We'll help put the information in, and we'll do our certifications as the auditor that we have to do, and then the client will have to do their certifications on it and then submit it themselves.
Are there things that clients can do before the wrap-up process to just either make it easier on themselves or just make the process quicker, easier, faster?
When it comes to wrap-up, it's a lot on us. There's not a lot that they do outside of if we have any follow-up questions.
So just being available for the
Just being available.
Okay.
That, and they'll have to review the financials. So when we get them prepared, they'll have to be available to review them. But again, just kind of being available.
The longer you don't look at the things or don't answer the questions, the longer this whole process takes in general.